October 17th, 2016, we had David Burrows of Barometer Capital Management on the program. It's the closest to our 52-week range we've got for you on your appearances. Combined, your top picks are up more than 13%. Big percentage gain on JP Morgan Chase since about this time last year. You're up more than 44%, including dividend. Do you still own it?
Yes, we do, yeah. Financials are a big weighting for us. We believe that there is a multiple-year theme in front of us as we reflate and as rates slowly work their way higher. We'll talk about another financial today, but we like capital markets. We like net interest margins that will grow for most of the banks, and we think this is more the beginning than the end of this reflation.
As we look at the screen there, it's had trouble breaking its head above that key level. What's it going to take to bring it even further beyond this?
Well, so if you look at the large U.S. banks, they are one by one starting to break out from these consolidations they've been in since, after the election last year. So Citigroup is breaking out, Bank of America is breaking out, JP Morgan I think will follow. A good company rallies and it consolidates, and then it rallies again. And unfortunately, people get bored while they wait and they decide to move on, often at the worst time. The fact that these companies held in as well as they did against a little pullback in interest rates tells you that there's room.
Yeah, I think the technicians even say that the bigger the base, the better the case for upside movement.
Absolutely, and these companies all have big bases.
Top pick number 2 from about this time last year is up more than 19%. That is the Class C shares of Google, Alphabet, technically.
Yeah, and this is again right in the middle of many structural themes, but specifically cloud and search, and it's one that I think you really want to own in a portfolio. Technology for us in our portfolios ranges anywhere from about 22% to as much as 40%. So we have a significant technology weight because there are so many secular themes here, and again, Google in the middle of artificial intelligence and cloud.
Why Goog as opposed to Google? G-O-O-G-L is the ticker symbol. Why'd you go with the Class C share?
Look, there's different ways you can go here. Google properties, 71% of revenues. We like this one.
Pioneer Natural Resources. This is the one that's underwater by about 23.5%. Are you still on this one?
Yeah, so people who know me and who have seen us on here before know we use stop losses on everything that we own. And when a sectoral theme tide goes out, we make our exit. Last year, after a very, very difficult 2014 and 15 for energy, which we've thankfully missed, we said in early part of last year, there's a trade in energy. We don't know whether it's a trade or something longer term. So you want to buy the strongest companies, which Pioneer was one of. But we got stopped out on this one at $176 and have spent virtually all of this year until about a month ago, X energy. But we have recently put some new positions on.
Let's revisit the issue of stop losses in the strategy, because some will just put it on a whiteboard, others will lock it into a computer, and then you have a volatile day, you get stopped out.
Right. So we're fortunate because we have a trading desk and traders who spend their day monitoring our positions on behalf of our clients. We identify exit points, which would be the point at which the previous behavior of the security is starting to change. So where is the trend breaking? And that's where we use our stop losses. They aren't sitting out in an order book somewhere where if we got a volatile day, we get picked off. But we do follow our stops. And it's very important. We don't believe you have to be in every sector all the time. If a sector goes out of favor, we'll make an exit. Because right now, we are at a point in the market where correlations of the degree to which securities are behaving the same is the lowest it's been in like 15 years. In other words, you can make a big difference being in the right sectors and the right stocks to the index itself at exactly the time everyone believes it's time to just go buy an index.
David Burrows is here, President and Chief Investment Strategist at Barometer Capital Management. We're talking North American large caps at 1-855-326-6266. There's a line open.